Hey, Logan, thanks very much for being on the podcast.
Thanks for having me.
Well, it's not the first time you're on a video, but and I'm pretty sure many people know about you. You have quite big following on Twitter. You have a fantastic podcast, which we talk about later on. Which, by the way, as I said, one of a few podcasts alongside with Friedman and Rogan I can actually listen from the beginning to the end.
That's nice of you to say. You and my mom are the ones that I know are at least listening to the entirety of it. But yes, I have I have started a podcast where gosh, I don't know when we're going to air this, but we are today 14 episodes in. So this week will be our 15th. And I sort of set milestones of starting a podcast. So from a Twitter standpoint, I've been on Twitter for, I don't know, 12 years or something,
Mm-hmm.
but only started in earnest tweeting really at the beginning of the pandemic. I was kind of bored at home and I'd switched jobs. I was at Battery Ventures for 6 years before and switched to Redpoint Ventures. And Battery is a registered investment advisor. And so with that, there's certain things from like a compliance regulatory thing that you can and can't say, and you need more approval and guardrails, and you can't just sort of shoot from the hip in the same way. And Redpoint liberated me a little bit from that. And so I started the job. I took the job in December 19 at Redpoint and officially started in March 20. And so the pandemic almost coincided exactly with my start date. And so at that point, I was bored and kind of freed up from regulatory compliance stuff. And so I started tweeting in earnest, and I would have to go back and look, but I probably had maybe 1,000, 2,000 followers. And now it's grown quite a bit since then. So it's been a fun 2+ year journey of tweeting in earnest. And yeah, the podcast has been a recent thing here in the last 2.5 months.
We'll talk about that as well. So let's just start from the beginning. You're a venture capitalist, right? And your partner at Redpoint. Tell us a little
That's
bit
right.
about people who have never heard of venture capitalists, those two people who might be listening to this podcast. Tell us a little bit about that. What do you do, and what separates Redpoint from other firms?
So, venture capitalists, what we do is we take money from people with large pools of it. It's mostly endowments, pension plans, fund of funds, high net worth individuals, insurance companies, just people that have large pools of money. We take money from them and we try to prudently invest it over roughly 3-year period for each fund. And so our goal is to invest in the absolute best companies we can, the best companies we come across in that 2 to 4, probably on average 3-year time frame. And our goal is to deliver fantastic returns to the people that trust us to give us money. A bunch of these institutions do a lot of great work. We have a bunch of health systems that have done a bunch of COVID research over the last couple of years, and we're helping fund their efforts, right? We have a bunch of universities funding their endowments. We have a bunch of pension plans funding their ability to deliver pension to the groups that they back. And so our job is to try to generate as much return as we can, investing in private market companies. And so where we have two groups at Redpoint, we have an early stage team that focuses mostly on seed series A. And then we have a growth team. We call it early growth. It's a little bit of an oxymoron, but it's typically series B and C. We like investing after product market fit has been established. And so the companies usually have 10, 12, 15 plus people. They usually have paying customers in place. And our goal is to try to help them become public businesses. And so we've been fortunate enough to invest in companies like Netflix way back when, Snowflake, Twilio, HashiCorp, DraftKings, Stripe, Sentinel One. So we've had a very disproportionate number of successes here. And I think what separates us at the end of the day, like the way I say it is venture capital is if you're selling 100% of your house, you probably don't care who's moving in too much. Like maybe with if the prices are exactly the same and the considerations are exactly the same. Maybe you'll pick the person you like more. But if someone's moving into an Airbnb room in your house, you probably care far more about, what that person's like, and are they going to be a good roommate, and are they going to clean up after themselves and all that stuff. And so private equity is much more akin to just selling your house and moving on, right? And so ultimately you're going to optimize for price because for the most part, you're walking away from the group that's buying it. Venture capital, you're inviting that person into your house if you're an entrepreneur, right? You're picking a partner to help you in your journey. And so ultimately our differentiation is it's a lot of the people that we have, right? We want to differentiate by the quality of the work we do and the support we provide to entrepreneurs. We focus in a handful of areas. So we're about 2/3 B2B, mostly software, and then 1/3 is fintech and healthcare. And so we want to be focused and domain experts in where we play. And we're trying a bunch of different stuff. You alluded to a podcast, but we are a fun group that doesn't take ourselves too seriously. And so I think we want to convey that message externally and make people know, help people realize that like, we're normal, we're fun to hang with. We can get a beer, we can grab coffee, we can grab lunch with you. And we're just going to be good partners on the journey. Because at the end of the day, we're beholden to the entrepreneurs we work with. And so we try to stand out in ways that help us appeal to entrepreneurs so that they know we're, going to be good partners on their journey.
So 10, maybe 15 years ago, if you asked a person, even in finance, to name VC firms, they would tell you about Sequoia, KPCB, whatever. Now there are like millions of funds. Where the hell did they come from? What happened in the last 15 years? How sustainable it is? And how many of those people are really full of shit, honestly?
Yeah, full of shit, probably a lot. But so the way I compare it is the industry kind of pre-2008 was, I say it was like broadcast television, where it was kind of the days of, there were only a handful of channels, right? In television in the US, there was CBS and there was ABC and there was NBC and Fox. And so what you had was the people that were making content for those channels were solving for what would appeal to the broadest group out there, right? They wanted to get something that would be liked by 60, 70% of people. Now, did anyone love I Love Lucy or Happy Days or some of the television shows out there? I don't know, like probably not, but it was broadly appealing. You could watch it with your family and all that. Then that was kind of the way venture capital was back then, where like, hey, you didn't differentiate too much in the domain that you focused on, in terms of the services you offered to entrepreneurs, in terms of the brand that existed. There were only a handful of firms out there. And so for the most part, you were just fighting, and oftentimes it was co-opetition where you might end up splitting around. Famously, Kleiner Perkins and Sequoia split the Series A in Google way back when, right? And so like it wasn't zero sum from a dollar standpoint. What's happened now is, you're right, the industry has exploded. And I think last year, the industry from a dollar standpoint grew like 98%, which is the biggest growth that's happened. It's 1% higher than what happened from 99 to 2000, was 2020 to 2021, right? It's kind of crazy. And the amount of growth we saw was a few reasons. One, there's some macro trends that are happening in general, right? Tech companies are staying private longer. And so if you go back and look, Microsoft went public with a $500 million valuation, and now it's a $2 trillion company, right? And so once upon a time, companies went private or went public way earlier in their journey. Now you have Stripe, that's a $95 billion company in the private markets that's still private. They haven't gone public, right? And so I think we've seen that prolongate. And so what was traditionally money that was going to public companies now is crossing over to make sure they can realize some of the upside that exists in the private markets, right? And so that's one thing, is just like there's more opportunity to invest in companies because they're staying private longer. Two, there's a bunch of tectonic trends that are happening, be it cloud computing, be it crypto, be it whatever, some of the stuff that's going on in fintech. Like there's a bunch of big trends that are happening. And so there's a lot of opportunity to build big companies, right? And these markets are far bigger than they ever were before because of the ability to reach people over Google, because of the ability to reach people through Facebook ads, because of whatever, Twitter and the feedback loop from customer acquisition. Used to be, if you were selling software, you had to go hire a sales rep that would go knock on doors and call on the CIO. And at the end of the day, that's not that scalable, right? But now, like these markets, because you can reach people in a very scalable way, are far bigger than they were in the past. And so that certainly happened. But then what's also happened as those two things have led to an influx of capital is you've had people just try to differentiate themselves in more and more ways. And inevitably, I compare where we are right now to like TikTok or the streaming wars, where everything can be hyper personalized to individual entrepreneurs. And so if you're a healthcare early stage fund, you might have health systems only as your limited partners, right? And so that's actually really enticing if you're a healthcare founder, or if you're a growth stage company that wants to work with kind of irreverent, anti-establishment group. There's Founders Fund kind of does a great job of owning that part of the market and being sort of this libertarian. Hey, we're not going to do what's PC. And there's all these different micro brands, right? Tiger's the biggest fund, and Andreessen's like has this power and heft, and Sequoia has this brand reverence, right? And there's all these funds that have popped up because of the amount of capital. Everyone's been forced to try to differentiate themselves in a meaningful way, right? And so what does that lead to? Well, it leads to a lot of nice optionality for entrepreneurs. There's like a Chinese menu of options, and it's like, hey, do I want the dumplings, or do I want the sushi, or do I want the chicken fried rice, or whatever? Like there's a whole bunch of options that exist on the menu. And is that sustainable? Will people get washed out? I think yes and no, right? I think that the amount of capital that's in the ecosystem right now isn't sustainable. And the last 2 years have been pretty exuberant. And so ultimately, I think there's going to be a lot of funds that have had a lot of success historically looking, but forward looking, they don't have differentiation. They don't stand out. They're not thought of for stuff. And so I think a lot of those firms that had historically been very successful, at least in terms of their returns, entrepreneurs might not want to work with them anymore. And so limited partners are saying, hey, I don't want to give those guys more money. And so I think there is going to be a big washout. We're starting to see it right now as the market pulls back, which I'm happy to talk about how that actually occurs. But I think there are probably a lot of people that are full of shit, but I think there's a lot of people that, this is all goodness for entrepreneurs, right? Which is what, at the end of the day, I care about is like, it makes my life harder, but at the end of the day, it helps entrepreneurs. And I think that's a good thing in general.
So entrepreneurs seem to be like picky who they want to work with at the moment. But do you think it has direct correlation to the fact that there's so much capital out there? And when capital disappears, they would just go to whoever gives them money?
I think so. I mean, there's a spectrum that exists, right? Of how much choice you have in who you want to pick and who you want to work with, and then what price that you're going to be able to work with them at, right? And so for a long time, entrepreneurs over the last year, prior to probably February, March of this year, entrepreneurs kind of said, hey, plus or minus, I don't want to be worth more than X, because there's a bunch of implications associated with that, right? Like, hey, if the market turns, I might not be able to raise an up round, or, hey, I want to make sure our employees get issued stock options at, a reasonable price so that they can realize the upside. So raising at a certain price has a bunch of implications that come with it. But for the most part, certainly over 2021, entrepreneurs would say, hey, here's the price I want to raise at, right? And then people would say yes or no, but they wouldn't really haggle over the price, right? And so that was kind of like, hey, here's what it is. And you might not get, Sequoia, but you might get a very, very good firm willing to hit that price, right? And now increasingly we're seeing a spread as the private markets have the public markets have corrected, which has trickled down to the private markets. We're seeing a spread exist where different people the entrepreneurs aren't really sure what things are worth because the venture capitalists aren't really sure of what things are worth, right? And so you might want to raise at $100 million valuation, and some firm is telling you, hey, we'll pay 150, and the firm you want to work with is at 40, right? And so there's this weird spread that exists on the valuation side. So ultimately, I think entrepreneurs are still going to be faced with the decision of what is each person worth to me having them on the journey, right? And so again, back to the analogy I used earlier of if that person's moving into the bedroom next door, right? And they're going to pay $5,000 in rent, but you hate them, versus the person's going to pay $2,000 a month in rent, but you love them. What is that worth to you to have someone that you enjoy being with? And ultimately, so many of these things fail, right? That's the inevitable state for most of these companies. The smart and sophisticated entrepreneurs, within reason, typically say, hey, you know what? The difference between $2,000 and $5,000 in rent could be a ton, right? But ultimately, this might not be worth anything anyway. And so better for me to have someone that increases my probability of succeeding, better to have someone that I enjoy being on the journey with me, because in all likelihood, this probably isn't going to work out anyway. And so better for me to have someone on the journey that I want to be with that might actually increase my chances of success, because at the end of the day, that's all that matters, not whether or not you're renting your bedroom over here for a little bit more or a little bit less.
How do you find opportunities? Do entrepreneurs reach out to you, which I'm assuming yes, but how do you select the one out of probably hundreds of thousands you get?
Yeah, it's a good question. So I alluded to this earlier, but I'm on the growth team internally, which is Series B and C. And so to some extent, opportunities are already have been qualified for the most part for me by either existing investors or by the scale that they've gotten to, right? And so for the most part, like the person with the PowerPoint and the idea, or the person trying to raise 200, 300K, just that's not what I do, right? Mm-hmm. What I do is I invest in companies that that want to raise, 15, 20 million up to 50, 60, 70, right? That's sort of like the sweet spot. And so to some extent, like there's a structure around the benchmarks that they need to get to before we even really have a conversation, right? And so I'll get reached out to all the time from people with less revenue, or aren't raising the amount of money that we're talking about, or whatever, right? Don't have the customer momentum. And so it doesn't, that's actually a pretty good disqualification for the most part of most of the cold outreaches I get. Then I would say it's kind of twofold. I try to maintain really good relationships with firms that are upstream from me, that do the types of businesses or back the type of founders that I like working with. And so there's a bunch of seed Series A firms that I maintain really good relationships with, and I consider a lot of them my friends. And so they'll come to me and say, hey, we've invested in XYZ company. It feels like a Logan deal, right? And they'll actually use those terms because they know what I like. They know I've said no to enough of their companies for reasons that, they understand. And so inevitably, like they help me disqualify things. Then frequently we have people on our team that are scouring, that are paying attention to what other firms are investing in, as well as just scouring different markets, right? And so I've done a bunch in like the CFO suite from the software standpoint, right? And so they know internally, hey, if they hear about an interesting company through a portfolio company or through someone they know, or at a conference, or they get a DM on Twitter or whatever it is that's in that market, they know to just qualify to bring it to me, right? That could be an interesting thing. And so to some extent, we're going outbound as well, reaching out to companies of a certain scale saying, hey, we'd love to talk to you about who we are and what we do and all that stuff. I would say the pure inbound sent to me, it's a lower, I don't know if I've invested in a company that came to me cold. Mm-hmm. Mostly because, like, I know my partners have that are investing earlier stage, right? Because they're, there's so many more opportunities that they look at. For the most part, once there's already institutional money into the company, once they've already raised venture, the existing investors typically help shepherd the company to who they want, who they think could be good fits. And so I've been proactive in reaching out to those investors saying, hey, I like that company. Would you make an intro? Or they have reached out to me and said, hey, this should be on your radar. This is a company we like. Or service providers. I've had lawyers tip me off to stuff. The pure DM cold email, I've yet to have happen. Although one I came really close on, and we've ended up being really good friends. But I think I've yet to do a specific one that originally just came in cold.
You just explained what you do, and I'm gonna ask you a question about stuff you just explained you don't do. But I'm guessing I'm not gonna have early stage VC for some time. So, like, if you founder, if you suddenly became a founder, and everyone in Silicon Valley forgot about who Logan Bartlett is, and you basically starting from scratch, what would you do first as a founder, and who would you go to raise money?
So two questions there. What if I were a founder, like what would I do? And then how would I raise money? So I invest after product market fit's been established, but I am fascinated by the product market fit process. And so I've spent like finding that. I sort of have always viewed that as black magic. How do you find customers and get them to pay you, right? And so I've sort of studied that in an interesting way. And I've had a handful of portfolio company CEOs that have taught me how they did it, right? And so I think if I'm a founder, what I'm doing is I'm identifying kind of a broad pain point that exists in a market, and then going to talk to as many customers as I can and iterating on, hey, is this a pain point? If I do this, would that help solve your pain point? And then going and doing that and showing them, and never asking for money, right? But just kind of getting that flywheel going of asking questions of people and trying to meet their problems that they have, and then actually delivering on it. And I found that I've been told, and I've seen with companies we work with, if you build that feedback loop of asking people what problems they have, saying, would this solve it? And then going and doing that, it builds a very nice flywheel of confirmation and positive association with potential customers, actual customers, whatever. So then from a VC standpoint, like how would you actually approach it? Well, I would say the easiest way, listen, the information that exists out there today is so much more than 5 years ago, 10 years ago, in terms of both the number of VCs as well as the types of what VCs will do, right? And so I would come up with a list of who are my ideal funds, but then who are my ideal people at those funds, right? And like actually trying to down select down of, you can start with companies that you admire that are a little bit bigger than yours and looking at, all right, who funded them, right? And maybe you get that CEO on the phone and you say, hey, I'm a seed investor, but you just I'm a seed stage company. You just raised your Series A. We're in the same space. I have a ton of respect for what you do. I found flattery is an amazing thing, right? And if you give very specific flattery to an entrepreneur and say, hey, I just read this blog post of yours and it's amazing. And I've been noodling something similar. And I would love, even if it's 15 minutes, to talk about this XYZ thing that I'm noodling and how it impacts our product, right? I found mostly people are pretty generous. If what you're asking for 15 minutes and what you're asking for is very specific and you're going after someone that's very relevant to you, people are generally pretty gracious with their time to give back. Now, sure, there's assholes out there that aren't going to do that, but I would go and find the companies you admire and maybe that are one tick ahead of you, and then talk to them, build a relationship, and then talk to them. Hey, so you got these investors, who else was interested, right? And then you get the list of who else was interested. And then you do some Googling of like, oh, well, here's some other people that are interested. and they invested in this company that's kind of in our space. Why don't I go get to that company, right? And see if I can talk to them. Or why don't I go search of who else they've co-invested with, right? Maybe it's a firm that, they split a Series A, back to the Google and Kleiner example. And you go say, oh, well, they've also invested with that group. And so you slowly build out your list of like, I don't know if it's 10, if it's 20, if it's 50. I think it's going to kind of depend on the stage. And you sort of prioritize that, right? And then you find the way. It's a lot of work, but it's like a sales funnel, right? It's like, hey, I'm going to go, I know I'm going to get ignored by, I'm going to reach out to 50 people, and I'm going to write super personalized targeted emails or Twitter DMs or LinkedIn DMs or whatever, right, to those people. And I'm probably only going to get 5 of those that respond in the first touch. And then I'll have to send a second one to the next 45, and maybe only 10 will respond then. And ultimately you get to a list of 25, and a bunch of them say no, but you end up with, 5 that really go deep. And then you end up with 2 term sheets, and you pick your favorite one. You really have to think about like approaching investors like you would prospects. And I'll tell you, when people approach me in a thoughtful way, and know who I am and have done their research about me, and they're talking to me for a very specific reason, 100% time I'll respond, right? And I might say, hey, it's not a fit for me, right? Or, hey, I'm sorry, I can't be helpful, or, hey, I'm too busy right now. But 100% of the time I'll respond. If someone sends me a cold email about a 500K Bitcoin or crypto seed check, those get ignored 100% of the time, right? And so I think there's a level of like thoughtfulness in treating it like a deal funnel that sometimes people forget, because there's so many investors out there, and you think, oh, well, if I spray and pray, ultimately some people are going to respond, but it's typically the adverse selection to it. I think there's much bigger benefit to slowly building it, slowly nurturing those relationships, being thoughtful about it. And I mean, that's how we connected, right? Is like, I've seen you on Twitter.
I offered you money and you agreed to come here paid.
I had seen you on Twitter before. I had a positive connotation with your Twitter account because of whatever interactions we had. You sent me a note being like, hey, would you want to do this? And I think you also shared some flattery of like my podcast and Twitter, made me feel good. I was like, oh, this guy gets it. He's one of the smart ones. He understands.
Keep going.
Yeah, exactly. So like you complimented me, and I was like, sure, of course. Like I'm happy to do this, right? And I think those tactics of like thoughtfulness, approaching people in the right forum. Like I spend a lot of time on Twitter. You probably do as well. I will tell you, like, LinkedIn DM is going to have a much lower success rate than a thoughtful Twitter message. Like, if in Twitter DMs, when you're not following someone, you see who else the person's followed by. And if it's anyone else that you follow, you'll see that. And so like those are the accounts that I look at, right? There's a bunch of cold bots from China that are sending me messages or wherever, right? I don't read those, but if I have some recognition and someone's being thoughtful in their outreach, I'll, talk to them. And so I think there's a level of thoughtfulness. Again, this isn't totally scalable, but I would say in general, the job of an entrepreneur isn't totally scalable as well. And sometimes it's a lot easier. And sometimes, you'll do all this and it'll work 100% as well as you hope it will. And sometimes it's going to be a slog, but at least if you treat it in a methodical, thoughtful way, you can't determine the outcome, right? Mm-hmm. All you can do is determine the inputs and try to mechanize the inputs as much as you can. And so that's what I would encourage people to do from a fundraising standpoint.
And to be clear, I did not pay Logan to be here.
Yeah, that's right. Yeah.
Let's talk about Twitter now. So you already said that you started tweeting back in 2020, when it was a pandemic. And currently you're known as a professional shitposter. Is it fair to say?
I some have said that. I think I earn my income in other ways, but I definitely do a little bit of that.
Let's explain to people what shitposting.
I sort of struggle with the definition, but conceptually for me, it is some version of trolling or an evolution of saying things that are obviously wrong, but entertaining and humorous. And so it was kind of something of an evolution from memes, and it's yeah, it's sort of taking a humorous slant or an ironic view of some of the things that are going on, and posting it. And some of the enjoyment comes from, a lot of people know you're joking, and some people think you're serious, right? And so it's a line of having a good time on Twitter, kind of entertaining yourself while in what can otherwise be a pretty serious world out there.
So one of the reasons I actually started following you when I got interested in all these VCs, I realized that most of them are. Do you remember that VC Brags guy? Or
Yeah,
go
sure.
whoever it is, ridiculing a lot of VCs for being, I don't know, cringy as they
Sure.
were,
Yeah,
and
yeah.
and you weren't. Like I'm like, okay, this is fun. So why do you think all these VCs are cringy? What's wrong? Is it like they IQ is much higher than the EQ, or what's the story there?
Yeah, I mean, that's probably an element of it for sure. I think, if you think about the industry historically, as we sort of back up to the concept of like that broadcast television days of it, like VCs used to have 100% of the power, and entrepreneurs would come to them, and the deal process would be a couple weeks, and the VC sort of controlled how that would play out, right? And increasing, and that leads to a interesting perspective on the world, right? When you have people always coming to you and begging you for money, right? Like that's obviously going to distort your worldview in some way. And two, a lot of the people were made fabulously wealthy and made to believe that their success was a function 100% of them and not luck or the circumstances around any individual investment, right? And so, if at the end of the day, some of these things from a probability standpoint, inevitably there's going to be people that are phenomenally successful, and whether or not they're actually good at what they're doing or they are just lucky, it's hard to know which one it is. You only get one life, and there's only one outcome to anything, but you could be very lucky and saved by whatever, and have an amazing outcome that probably pure luck and no skill involved, right? And so I think the combination of the power dynamic, the wealth, the luck, but thinking it's skill, and then also probably some elements of EQ versus IQ. I think probably all of those led to a very self-serious kind of generation of venture capitalists.
It seems to me that when somebody has about 10,000 followers, they turn from a decent human being into some philosophical guru. I've noticed that yet.
Twitter's interesting, where there are only a handful of ways to grow consistently on Twitter, right? And I think once upon a time, back 10 years ago, right, or when Twitter was first big, 2008, 2009, it was pretty easy to build a big following because, whatever, there weren't a ton of people putting anything interesting out there. And so now there's so many people putting interesting things out there. And there's only like three ways I think that people consistently grow. One is like doing fortune cookie philosophy stuff. One is doing like threads and engagement bait around that. And one is like, has been posting jokes or memes or shit posting or all that. I think all of those are getting harder because the thread one seems to be working the best consistently. I mean, I happen to like it the least, but it seems to be the one that like is very sticky and grows with a group. But for sure, like there's different tactics that people do to grow their Twitter following. And I would say one of the things I've learned is like, the followers you make are the ones you keep, right? And like just be careful if you come up in one way and you have a bunch of followers for one thing, that's what they're going to be there for. And just be aware that if you're doing some shtick or some don't want to be long-term branded in some way, just be cognizant of the fact that like you might be growing, but it might not be the brand you want, right? And so I think that's something that people need to think about as they get to 10,000 followers and start posting fortune cookie, thought leadership.
So have you thought about yourself thinking like, well, I'm obviously entertaining, but I don't know whether it's gonna hurt my business. Was it this
Yeah,
kind of thought at
yeah,
all?
I haven't had something that's popped up that has been explicitly damaging to me, right?
Yeah.
I've probably crossed the line at times, and I've probably offended people. I know I've offended people at times, and I know there's inevitably people that dislike me because of something I've done or said, right? That's just sort of the way it works. But I would say that I recognized what I was doing along the way, and I was going in eyes wide open, and I was it's not a character, because a character implies that it's disingenuous from who you are. I
Mm-hmm.
would say I was only surfacing one part of my personality, one part of my sense of humor, one part of my interests, right? I was only surfacing not getting 100% of a character or view of myself, but hopefully throughout the following that people had, or as they got to know my style, they could understand that there was a depth beneath, like the joke.
Obviously.
A joke might seem simple and funny, but hopefully they recognize that there's serious thought and intelligence that went into that, right? And there's a level of relatability that, hey, I don't take myself too seriously, and at the end of the day, I just want to do well by the entrepreneurs I work with and the people that give us money, right? And so that was what I was hoping to convey. I think it's been mostly, almost universally successful for me. I can't say that there aren't some things I wish I could take back or whatever it is, but it's definitely been a benefit. And so it was to some extent accidental. And then once it started snowballing, I recognized what the opportunity was, to some extent what the trade-offs were. And it allowed me to at least go in eyes wide open with what I was doing, what I was thinking about.
Did it help your business as a VC? Did you get a lot of
I would say where it helped, it's hard to say, like, I don't know if I could point specifically to X deal that only would have happened because of Twitter, right? I can say that the number of meetings I have that start with, oh, I follow you on Twitter, or, oh, I'm a big fan of your Twitter, or, oh, yeah, I would love an intro from an investor. I know him from Twitter, or whatever it is, right? That's been pretty high. It's probably a third or half of the conversations or intros I have is some level of familiarity with that. And now increasingly some percentage of people listening to the podcast we put out. And so it's hard to say, like, very specific, hey, this is the benefit I've got from it. The good news is our business model is, I just need either one for it to be worth it, right? Yeah. Or I just need to feel like I'm making progress to the future, consistently towards the future, and that I will be better suited as a investor, as a board member, as a partner to entrepreneurs, as a steward of our LP's capital in the future because of whatever I'm doing. And I feel like from that calculation, it's a pretty easy one, that, like, I feel like being known is better rather than not. I feel like being known to have a sense of humor is better than not. I think, being out there and having people have familiarity with you through whatever medium is just goodness. And so, yeah, so that was kind of how I thought about it. And I think it's proven beneficial.
How often do you type a tweet and then, like, no, it's a bad idea?
All the time. For a long time, I had a couple of buddies that I still will do it sometimes, that I'll send a tweet to before I send it and just say, like, I want to make sure that I'm walking a line of, I want to be joking, but not mean spirited. And I definitely at times will cross that line, but I try not to. I also want to be funny. And, sometimes I think something's funny just in my head, but someone will be like, oh no, that's not funny. And so I'll send that along as well, just to validate if it's on the line for me. And then my drafts are filled with ideas that I'm like, oh, either they're half baked or they're kind of funny, but I need to, I just never felt good enough about pressing send on them. So that happens all the time.
So isn't there like a service where VCs hire a bunch of comedians to tweet for them? Be honest.
I don't know if there is that service. We have not yet employed that. We are actually are just to give a quick plug. We do have some content that we're putting out through Twitter on the Redpoint channel, as well as on Instagram Reels, as well as on TikTok. We have a group that actually works with us to come up with some of those ideas. And so and a lot of them are a lot of them, there's like 3 of them, but they are very funny people. And so that some of those ideas are actually, we kind of crowdsource and we come up with what the best of people are thinking about. But yeah, I have yet to have anyone actually writing all my tweets for me or anything like that.
But to be fair, I think some people do use others, because sometimes I've even noticed the difference how they used to be, and then suddenly they got sense of humor. I'm like, I don't know.
Oh, that's interesting. Yeah, I'm sure. Listen, comedians get paid a lot worse than venture capitalists, I would say. True. And so it's not totally surprising to me that a VC would want to be liked and could come up with some financial arrangement with a writer to help them. So that doesn't shock me.
Hey, tell me how you started the podcast. Whose idea was it?
Yeah. So I actually looked at All In is a popular, I think it's a top 25, 30 podcast in the world these days. And I know a lot of those guys, and they picked a good time in the pandemic when people were at home, and they're interesting personalities and, all proclaimed billionaires. And they wanted to talk about, what was going on in tech. And I sort of looked at that, and I like all of them, but at the end of the day, there was not the same, they're at a very different point in their life and the topics they want to hit than I am, or the topics that I'm interested in. And so while I find the war in the Ukraine incredibly meaningful, there's times I want to hear that, and there's times I'm not, and there's people I want to hear some of that information from, and there's people I don't. And it for a long time took a very serious tone from a group of very well-off individuals. And so I looked at what they were doing, and I said, hey, there should be another version of this product out there, right? Not to say we'll ever be as successful as they are, but it felt like I had a big Twitter following, and that I should at least try to come up with some version of this that was authentic to me, right? And so we started having that conversation. I spoke to 2 friends, Zach Kukoff and Nikita Beer, about it. And we started noodling on exactly what the format would look like. And then we did our first episode at the beginning of January or end of January. And it's been a lot of fun. We've hit a bunch of snags along the way. I found out I've developed a lot of respect for people that do this. And so we're going through not a lot. We're evolving the model now, where it's going to be mostly me going forward. Nikita is a founder, and he's launching his app. I think it just launched. And so he was just so underwater from a time standpoint. And then Zach's at a bigger fund than I am, General Catalyst, and they have different considerations with what they can and can't say. And ultimately, that was kind of causing some friction. He's already bald, and we can't have him lose any more hair. And so I think it was pretty stressful figuring out, like, hey, Logan made this joke, but is that going to offend people internally and all that stuff? And so it was a really fun, we've had a fun run. We made it 2.5 months of doing it. I'm going to keep at it with them involved. They're still going to be on, but we've evolved the model a little bit where it's going to be mostly me, and then incorporating two guests to opine on the news within the tech world with me. So it's been fun.
Yeah, I've seen several. I saw you had Raboy.
We had Keith. That was fun. Keith's been a friend or a friendly person to me in the ecosystem for a while now. So that was great. We had Ryan Breslow from Bolt came on one. We had Dan Primack from Axios. I just recorded one with Ben Thompson and Packy McCormick, who are tech news and strategy writers. I have Aaron Levy from Box coming on, nice. So that'll be fun.
I saw the other one with what's the name of the guy, Jeff Wolf or Josh Wolf? From
Lux. Josh Wolf from Lux. Yep, we did one with him. So it's fun. I mean, I thankfully have a decently big network of who I think are interesting, kind of fun people. And so I think the format going forward is going to be that, just having on interesting, fun people for me to talk to about whatever.
Who would you love to have on your podcast? People who you're probably not going to have.
Never say never. So I invited Mark Andreessen on. He seems like he would do it. He said he was slammed right now. Jack Dorsey and Elon Musk would be fun for different reasons, but I think both of them would be very interesting to have on. I mean, obviously some of the bigger people in tech, but the ones with a sense of humor, like I think Mark Zuckerberg actually could be fun if he was willing to let his guard down a little bit. If not, it would probably be a disaster, right? And so, I think anyone that is interesting has a sense of humor. I think if you're interesting and have a sense of humor and some level of credibility, I think I would love to have people like that on the show. And so, yeah, we're going down the list and leaning into different friends that I have to get them on now. And at some point, we'll keep expanding the group.
You mentioned Dorsey and Musk. Obviously, you discussed Twitter quite a bit on on your podcast. Like, if you could assemble a management team for Twitter, who would you put in there?
That's a great question. I mean, I think Zuckerberg, if he was allowed to buy Twitter, say what you will, people knock him, but like the monetization and the ad engine that they build and have would make that an insanely profitable company pretty quickly. I think they would ship product and iterate a lot faster than what we've seen. I mean, just think about how quickly and how much Facebook's changed in the last 10 years and the number of things they've executed on. I also think, I mean, people give them a hard time, but I think they've really gotten their arms around the bot and the misinformation and the harassment and a bunch of the issues that Twitter deals with as a business. I think if there's anyone that's sophisticated enough to do that, I think it's them. And so, it's a really interesting question. And I guess my bias would be to him, but I'm sure there's other people out there that would do an amazing job.
Wouldn't you put Nikita in his team as well?
Yeah, Nikita would be good. Nikita is a really impressive product person. So I have a lot of respect for Nikita. I think he would be more VP of product than CEO, but I think he would do a really good job.
That's cool. And if that happened, you definitely put money into it. You buy stock, huh?
If Nikita, maybe, I don't know. Zuck for sure.
Gotcha. Okay, Logan, thanks very much for your time. I appreciate you being on the podcast.
No, thanks. This is fun. I appreciate you bearing with me. I know it took a little while to get this scheduled, but this was a lot of fun.